Hello traders, hope you're doing well. The topic for today is how to avoid false breakout. In this video, I'll be sharing 5 secret rules which I follow while trading to avoid false breakout. If you start following these 5 simple rules, I'm 100% sure that you will be able to make consistent profit in trading. Now without further delay, let us see what are these rules. Rule number 1. Do not enter the trade in parabolic movement or when there is a strong one-side momentum. So what do I mean by parabolic moves? Let us understand this with an example. Imagine that the stock is making a movement like this and it started facing rejection and went down. And again it moved up, faced rejection at the same level for the second time. Now traders will start considering this area as a strong resistance level, right? Now after this, if the stock again is going up like this, making higher lows and higher highs and gives a breakout, this type of breakout is considered as healthy uptrend because this uptrend is making small retracement which is activating buyers and sellers at different price levels. Small retracements like this plays a very important role in price action trading. It helps in creating stronger uptrends and downtrends. But instead of this, if the stock directly makes strong bullish candles without any retracement and breaks the resistance level, this type of movement is called parabolic movement. Traders, 90 to 95% of the time, if we enter in this kind of breakout, our trade will not be successful because it can turn into false breakout. So it is better to avoid entry when stock is giving this kind of breakout, that is parabolic breakout. Always remember this, if the buyers wish to break the resistance level, they cannot bring up the price from this low level till here and break the resistance level. If they do that, it will not at all be profitable for them. There should always be proper accumulation zone before breakouts. Okay? Now traders, let me show you a live chart example. Now traders, this is a chart of Cipla 15 minutes time frame. Now if you look at this chart, the stock went up. Now at this level, it faced rejection. Again for the second time, it went up. Rejection at the same level. So what a lot of traders will do? They will mark this level. So this level can act as a important resistance level. Now again the stock went up. Again it faced rejection at the same level and then it went down. Again for the fourth time the stock went up. It gave a breakout, but immediately if you see, we started getting rejection. Now looking at this candle, a lot of traders might think why we should not enter the trade here. I will tell you why we should not enter here when I discuss about the other rules. Okay. Now after this, what happened? Immediately we got a rejection red candle, and from here you can see completely the stock went down. We can consider this also as a parabolic movement because the stock continuously it went down. Now here if you see, the market took support at this level for quite some time, right? So let me mark this level. Now after this, let us see how the market went. So this parabolic movement did not work, right? The market took support. Now for the second time, again we can see parabolic momentum, right? Without any retracement like this, the stock directly went to this level. And it also broke the resistance line. This resistance line, the stock broke and it went up. Now did this breakout sustain? No. Immediately we got a red candle. From here continuously we started seeing rejection in the market. You can see it here. Now traders tell me after this breakout, a lot of beginners might think to enter the trade thinking that the market will go even further. But that is not the case. Little up the stock went, immediately from the next candle it came down. A lot of people where they will keep stop loss, they'll keep it here, they will keep it here. All their stop loss was hit. See here first time this parabolic momentum the market rejected, but actually we cannot consider this as parabolic breakout because it did not break below this level. But if it had broken this level and gone up, this is one parabolic rejection. Again for the second time it went up, the trend did not continue, again we saw rejection. Now these big investors, they will not get opportunity to buy the stock at one price level. The stock can go up, come down. At this level they will buy certain quantity, again it will go, again when it comes back, again they will buy certain quantity. So they will try to average the price of the stock by purchasing the stock at different price levels. But this parabolic movement did not even give any chance for the buyers to test different price levels. Now after this parabolic rejection, if the market is staying below this trend line for certain time and then it gives a breakout, that is a healthy momentum because this can act as accumulation zone. So this is the first mistake which a lot of traders do. They enter the trade looking at parabolic moves. Now let us look into the second rule. Now rule number 2. Always buy breakout after consolidation. So what do I mean by consolidation? Let's understand this with an example. Now if you look at this example, the stock is moving in an uptrend. But when it comes at the resistance level, it is consolidating. That means it is moving within a range. Only after that, the stock is giving a breakout. After a trend, if the stock moves in consolidation and gives a breakout, the success rate of entering those kind of trade will be very profitable. Most of the time, you can make more than 1:2, 1:3 or 1:4 risk reward also. Trading in these kind of setup will increase your success rate and it will also help you to achieve your target more quicker. Traders, you can open any stock charts or Nifty, Bank Nifty chart or even Bitcoin for that matter. The price movement will always follow this principle. 1. The stock will be in trend. Now after a trend, the stock will start trading within a range. Now this range is called consolidation. After consolidation, again the stock will start moving towards the upside or the downside. Again it follows a trend. Now after this consolidation phase, whenever you get a breakout and you enter the trade, your success will be very high. Now let us see 2 or 3 live chart examples. Now this is a chart of Divis Lab 5 minutes time frame. We can clearly see that this stock was in a trend and now it is there in a consolidation phase, right? Now let's see what happens next. The market is still consolidating. Now here we got a breakout, right? After this breakout, what happened? You can clearly see the stock moved towards the upside. Let me show you one more example. Now this is a chart of BPCL 5 minutes time frame. Here you can see the stock came down. Now after this you can see a range here, right? The stock was in consolidation. After that it continued the trend towards the upside. Trend can be both upside or downside, right? So this is rule number 2. Always try to enter the trade after consolidation. Now rule number 3. Always trade with volume confirmation. What do I mean by volume confirmation? Let's understand this with an example. Traders, this is a chart of Sun Pharma 15 minutes time frame. Now if we observe this chart closely, this stock rejected at the same level for 2 times. First the market rejected here. Now for the second time, this stock rejected at this level. Can you see a consolidation and retracement? So we can consider this level as important resistance level. Now after this what happened? The stock consolidated for a while, it went down and immediately it went up, right? So this was our breakout candle and this candle had volume confirmation. Can you see the volume of this candle compared to the previous candles? The volume of the breakout candle is at least 30% more than the previous 10 candles, right? Traders, volume plays a vital role in price action trading. Whenever you get a breakout with good volume, it clearly shows a lot of people are interested to trade with the stock at this particular level after the breakout. So next time when you are entering a trade after breakout, make sure the volume of the breakout candle is at least 30% more than previous 10 candle. This will significantly increase your success rate. Okay? Now let's look into the fourth rule. Now rule number 4. After the breakout, enter only when the next candle breaks the high of the breakout candle. Traders, in almost all my breakout strategies, I always enter when the breakout candle closes. Now what do I mean by this? Let us understand with an example. Now this is a chart of Hiro Motoko 15 minutes time frame. Now in this chart, this level is acting as important resistance level. Now if I want to enter the trade in this stock, my entry will be little above the high of the breakout candle. So entry will be somewhere here and my stop loss will be somewhere here. Okay. Now if you observe closely, my entry is little above the breakout candle. Now I do this because if the market is really bullish, then for sure it will touch my entry level and from there it will go up. And according to this rule, we have to enter only after the close of the breakout candle. But lot of beginners do not wait until this candle closes because they have something called FOMO, that is fear of missing out. They don't at all wait until the breakout candle closes. Now in the live chart, there was no breakout at this level. Okay, that is something I drew. Let me remove that. Now this is how the candle looked. A lot of people would have entered somewhere here. And of course stop loss they would have kept at the same place where I have kept. But what happened? Now because they did not wait until the candle closed and they entered the trade, later they got to know this is a false breakout. Now their entry got triggered. Now what will happen? The market went down and it will hit their stop loss, right? So this fourth rule is very important. You have to wait until the breakout candle close. Only then you need to enter the trade. Now let us see rule number 5. Now last and final rule, rule number 5. This rule says try entering the trade at retest to increase your odds of winning. Now let us understand what do I mean by this. Now if you see this example, the market did not make any retracement at resistance level. Rather, it made a parabolic move and it broke the resistance level. Now an experienced trader will not take any entry at this level. They will wait for retracement. They will wait until the stock retraces the resistance level, and once it goes up and breaks this previous swing high level, only then here they will plan their entry. Okay, this is one way how you trade in parabolic movement. You wait for the retracement after the breakout. Once the high is broken, you enter the trade. Now there is one more way. Now let's say the stock made parabolic momentum, but before it broke the resistance, it went under consolidation like this. Now at that time, you need not wait for any retracement because consolidation is already over, right? At that time, you can enter at the high of the breakout candle. Alright? So this is rule number 5. Now traders, these are the 5 simple rules which I always follow to avoid false breakout entry. Following these rules has significantly increased my success rate. I'm very sure that even if you start following these 5 simple rules, you'll see significant improvement in your day trading. Now if you're a working professional and you would like to learn a day trading strategy, you can check out our complete price action trading course. In this course, we have shared a lot of day trading and swing trading strategies. But if your goal is to be an intraday trader, then you can check out our 60 days trading challenge program. All the strategies taught in this program is specially designed for day trading. Now, if you wish to enroll to this program, you can download our app from App Store as well as Play Store. The download link will be shared with you in the description box below. Now traders, it takes a lot of time for us to create such videos for you. If you enjoyed the content in this video, don't forget to like and subscribe to this channel. Now traders, that's all for this video. I will see you in the next one.